Hey, it's Nick here, and you're in the Transparent FX Academy. I'm a top author on TradingView, and it's time to make another full market breakdown to see exactly what kind of opportunities we can be looking for on the period that we will be analyzing both from a technical and an order flow perspective. So without further ado, let's jump onto the charts. Okay, so let's make a full breakdown of the situation that we currently have on gold. Now, the reason for which I want to speak specifically about gold is because it is very near to providing to us a good trading opportunity. So obviously want to give you guys a full breakdown of the situation that we have to see how we can be looking to capitalize on the next move in this market. Now, as usual, I will be keeping the analysis as educational as possible. So first, we will be speaking about the technical aspect of this market. We will then go and see what we have from an order flow perspective with the commitment of traders, which is what the biggest banks and institutions are doing in the market, specifically the non-commercials, which are the hedge funds. So who is in the market to actually speculate and make money. And by being able to follow what they're doing in the market, so what the big boys in the market are doing, we have the possibility to trade alongside with them, and we do have an advantage over our competition in the market. And by the end of the video, we will know exactly what kind of opportunity we can be looking for on this pair, actually on this commodity. Now, starting here from the monthly time frame, what do we have? Now, on the monthly, we have a market which has just created a quite strong impulse to the upside. Now, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of the impulse, what we can see is that the market has stopped just before the 50% of the Fibonacci taken on the monthly impulse, which is a strong support area from which you do expect the market to start the continuation to the upside, because the pattern that the market usually follows is impulse, correction, and continuation to the upside. So after an impulse and a correction, you expect the market to provide a continuation to the upside. Going down on the weekly time frame, what do we have? Now on the weekly, we have a market which has just broken above the previous resistance. In fact, here the market was finding quite strong resistance, and now the market has broken above the zone from a weekly closing perspective with the previous candle, and now the market is creating a quite strong impulse to the upside, breaking above all structure. But there is one very important thing that we must notice. We must notice that at the moment we have reached actually a quite important supply zone for this market. In fact, exactly from this area, the market had started all this move to the downside. So this area was a very strong supply zone for gold. And currently we are testing exactly the same area from which we can again expect the market to get rejected to the downside. So checking the monthly and weekly, what we can see is that on the monthly, everything is still bullish. We can expect in the long term more continuation to the upside, but by looking at the structure that we have from a weekly perspective, as we have just seen, we have just approached a strong supply zone from which we can expect the market to provide a retracement and rejection to the downside. Going down on the daily time frame, what do we see? Now on the daily time frame, price action is very interesting. In fact, we can pinpoint our supply zone by noticing that exactly from this wick, the market had started all this move to the downside. So this wick is a very strong supply zone for this market from which we do expect the market to provide a move to the downside. Now, we had spoken about gold quite a few times in the past. I spoke about gold when the market was here. I made a full breakdown explaining all the reasons for which from here we wanted to see the market create this move to the downside, and that is exactly what the market did. Then I spoke about gold again when the market was here, and I explained all the reasons for which from here we wanted to see the market create this move to the downside, and again, that is exactly what the market did. Then I spoke about gold after the creation of this W formation when the market was here, and I explained all the reasons for which we expected the market from here to create this move to the downside, and again, that is exactly what the market did. Then we had the creation of this overextended W formation, and I explained all the reasons for which from here we wanted to see the market create this move to the downside, and again, that is exactly what the market did. And by the way, I will link all this previous analysis in description. So you find all this previous analysis linked in description, so you can go and check it out for further reference and more free education. Hey, just a quick thing, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. What kind of opportunity we have now that we can be looking to capitalize on? Now, on the daily, as we have already seen, we are inside of a strong supply zone. And actually, we have already started to reject it to the downside. And a very important thing to notice is that in creating this overextended W formation, the market has also printed a bearish pattern, because the overextended W formation that we see here is a bearish pattern, after which you expect a move to the downside. In fact, after an overextended W formation, you expect the market to provide a move to the downside to go and complete the pattern at least at the 0.382 of the Fibonacci taken on the overextended leg, so in the last impulse leg that the market has created. So in this case, the Fibonacci for the first target to the downside will be placed from this low to this high, and we expect the market to provide a retracement at least to the 0.32 of the Fibonacci taken from this low to this high. And overall, we can expect even a deeper correction. So how we will be approaching this kind of opportunity and situation that we have from a technical perspective on gold. Now, before I show you that, let's first go and see what we have from an order flow perspective. Now, if we check the COT data for gold, what we can see is that with the last report, hedge funds have increased their long positions by 9.2K. So a massive 9.2K long positions were added on gold, bringing the long positions at 349K, and the short positions were only increased to 71K. So we expected gold to be strong, and that is in fact exactly what we are seeing. We are seeing gold create a massive uptrend and a quite strong impulse to the upside with strong bullish momentum. And that was clearly expected because hedge funds were adding a lot of long positions. And if the biggest banks and institutions are buying, you do expect the market to provide a move to the upside. However, what we can expect as well is a retracement, considering that they have also started already adding some shorts. Now, this doesn't change the overall long-term view for gold, but it definitely gives us the possibility to see a retracement after such a strong impulse, considering that we have a bearish pattern and we have just tested strong supply, both from a weekly and a daily perspective that we have already identified with this box here. So what we expect is definitely to see the market give us a move to the downside. So how we will be looking to capitalize on this move to the downside with students. Now, as usual, the monthly, weekly, and daily timeframes combined with the COT data are the best timeframes for the direction of the market. But when it comes to confirmations and entries, the best time frame is the 4 hours. And at the moment on the 4 hours, what we can see. Now, at the moment, from a 4-hour perspective, we can see that the market is still massively bullish and has a very strong bullish momentum. In fact, the market has been creating higher highs, higher lows without breaking any kind of structure to the downside, and it is still absolutely bullish. So until everything will remain bullish as it is right now, we absolutely cannot be looking for any kind of shorting opportunities. However, things might definitely change in the future, which is exactly what we will be waiting for with students. So until everything will remain bullish as it is right now, the market will easily continue to the upside. But if we will see the market from a 4-hour perspective shift from a bullish to a bearish market, there is definitely the possibility to be looking for a shorting opportunity. So with students, we will be monitoring price action from a 4-hour perspective, waiting for the market to shift from a 4-hour bullish market as we have right now to a 4-hour bearish market. And only if we will see the market shift from a 4-hour bullish to a 4-hour bearish market, only at that point we will be adding gold to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to retrace at least to the 0.32 of the Fibonacci taken on the daily impulse. If you made it this far in the video, it would be great if you can smash that like button and comment below. It really does support the channel and support the creation of more free education and analysis for all of you. But this is just the tip of the iceberg. I have a full mentorship program that will teach you exactly the rules of my rule-based strategies and also give you every single day a new market breakdown in which I show you exactly how to apply the strategies with entries, stops, and take profits, as well as answering every question that you have every single day, including the weekends. So it's a very complete program. It will teach you everything that you need to trade the market consistently. So I will see you in it. The link is in the description, or I will see you in the next video.